Good morning, ARMR Insiders. Welcome to the morning meeting of the ARMR Report. We call this our virtual hedge fund. CIO, portfolio manager. We're going to get ourselves ready for the trading session. We're going to go over stock market investing. What's the big picture? We're going to look at the indexes and what our risk monitor's telling us. Then we're going to drop down. We're going to highlight number one stock on the desk. We were buying it yesterday. I'll explain why and give you some thoughts so you can do your own research and drill down a bit into what the next step is for us. We're already significantly committed to this market in the leaders. I'm going to tell you what we're going to do next. What are the top groups / ETFs that we're focused on should the market continue to unfold in a mechanical bullish way as it has been since November 11th, when our risk monitor went green and we got aggressively long the market. So we're just going to talk about where we are now in that cycle. Please remember, you have to be the smart money. Everything you hear here with me or anywhere else, at the end of the day, you have to figure out your risk tolerance, what your goal is, what your strategy is, and then execute it. Okay, you could be the smart money. You got to get there if you're going to be successful investing over a long period of time. I'm going to try to help you do that by sharing with you 30 plus years of being in the trenches. I'll share with you my strategy and how I do it, and then you grow from there. Okay, step one, stock market investing, risk monitor direction. Where were we? Where are we going? And how do we execute? I shared with you not too long ago, maybe Tuesday of this week or maybe Friday of last week or Tuesday of this week, we had a discussion just like this. And I said there's three possible scenarios the market's going to play out here. The number one scenario, what it looks to me like the market's doing, is building a high tight pattern. This is a term used by the Investors Business Daily, IBD, William O'Neill, and I'm an acolyte of William O'Neill. And so the most bullish patterns, the mechanical bull market, the ones that are the strongest, will have a rip off of the low, consolidate in a 4 to 7 week tight pattern, and then start the next leg higher. That is the most bullish scenario. So let me just explain that right now. If that happens, you're in the most bullish market. That's what that information is. So we're going to go over the charts right now. And what I'm going to share with you is something you can learn and you can do while others are going to be out there predicting market direction and coming up with fancy terms using mathematical equations so that they sound smart, but in reality, they're hiding a secret doubt. And they'll talk about things like weakness windows and try to predict what's going to happen next. We don't do that on this desk. Okay? You don't need to know all kinds of fancy math. You don't want to hide behind that. We don't try to predict what's going to happen next. What I'm going to share with you right now is what's happening now on the ground. It's the difference between being a soldier in the midst of combat and being some general somewhere in an office high above. We're in combat every day, you and me. And so what we do on this desk, what we call it on this desk, is we read and react. We do read and react trading. That's what we do here. Somewhere, my high school hockey coach is smiling, okay? Because that's what I'm sharing with you. And it's a tool and it's a strategy that you can learn on your own and you can end up being the smart money. So let me show you how it works right now. We do use a simple probability algorithm, and I share that with you, okay? We use a bunch of technical indicators, put them all together, optimize them. All right, we do that. We do some mathematical equations to give us a probability entry point. That was right down here in that green box. We call that risk monitor green. That was right here on the first, actually, it was the 1st and 2nd of November of last year. And that's where we load the boat. That's where we load the boat when we're putting capital to work on this desk. We're reading and reacting to what the market's telling us. And at that moment, the reward versus the risk we have to take was optimal. That's when we step up and put our capital to work. It led to a huge rally in Q4. When we get a green box like this, the expected statistical move is going to be in this lighter green box up here. So this is dark green, and this is called your money green, okay? So the statistical probability is the market will go up into that range, and then it takes a break. So we already knew that range before the market got here. And when it gets up here, we know to reduce exposure, raise some cash at targets, because these are the targeted exits. Now, you might say to yourself, gee, that sounds a lot like a prediction, Brett. Not a prediction. Probabilities, and we use them to manage risk. But we read and react to what we're given. So if the market just blew through that money green location, we would sell nothing. We use stops, and we move our stops up as the market's going up. Those stops I have for you now are in red. These are red lines, 2 stops. If the market gets below the first stop, we cut exposure. Gets below the second stop, risk monitor would turn red, and we would go max cash. So the read and react trading that I'm teaching you, that I'm sharing with you, is really very simple to execute. You could create your own algorithm of probabilities to figure out where the entry point is, or I'll share mine with you. That's what I do, right? You guys are subscribers. You're on the desk with me live all day. You see the risk monitor. You know how it works. All right, so that's step 1. We get long. The minute we get long, we know what our stop is. We're reading and reacting to what the market's telling us at that moment. And if it changes, while the probabilities are high, the market should go up at that point, it's still just a probability. Even if we're right 8 out of 10 times, twice, the market's going to hit the stop immediately. And that's valuable information. We know that that doesn't happen very often. So when it does, the market's about to get really ugly. We're reading and reacting to what the market's telling us. So when the market ran up into this green zone, okay, we didn't just sell things as it hit the zone, but we raised stops, and we got stopped out. Right here on the 28th is actually when we booked profits on the NASDAQ and a bunch of this trade. We actually top ticked the market, but that's not normal. I'll just happy to tell you we got lucky there, right? It ran right up at the end of the year, had a reversal bar at the second target, and I decided to take profits off the table. And then the market, came in hard. That, sometimes you'd rather be lucky than good, right? So went above the second target, booked our profit. And what I told you then was, when the market comes back down to the support, that's where I want to buy it back. So this is precisely what we're doing on our desk. Book our profit at the top here, comes down, tests the support, and we added our position back. Whatever we sold here, we bought back. Now the market is making new highs. If we close strong today, this will be the completion in week 6 of the classic 4 to 7 week tight pattern as laid out by William O'Neill and Investors Business Daily. Okay? So how do we proceed from here? We're already max long the leadership. The market goes in really a couple of stages in a bull market like this. Step one is we want to be on the leaders in a big way. And when you get paid on the leadership, you've earned the right to take more risk. So you could book some profits on the leaders and rotate them into the next line of ideas that are coming up off of their support levels. So while this is an interesting situation, while the leaders, NASDAQ 100 type names, and we're long double and triple the NASDAQ 100, we're long double and triple the S&P 500, which is yet to break out, but it looks like it, let's hope it follows the NASDAQ 100 and we'll get that confirmation there. What we're not long is small caps. Now you see small caps, the market will correct in either time or price. The most bullish market will correct in time and make a 4 to 7 week tight pattern and then blow out again. That's what the NASDAQ 100 is doing. And hopefully the S&P will follow that. This is an example of an asset correcting in price. So while it's in 4 to 7 week tight, why does that work? Because generally it'll take 4 to 7 weeks for the moving averages to catch up with the market price. So price explodes, goes sideways, 25-day and 50-day moving average catches up, market goes again. Sometimes the price comes down to the moving average. And that's what happened here with small caps. The black line is the 50-day moving average. So we're looking for the small caps to find support at the 50. And if the leadership breaks out and follows through, I suspect in the next couple weeks, we're going to be long small caps again. Same thing with something like ARC Innovation. Now that's cratered through the 50. So we may not use ARC, but I'm just using this as an example. The innovative stocks, the small cap stocks, they've been whacked as the leadership is consolidated. Leadership breaks out, then we shift. So we're loaded here. And what do we've actually enhanced our exposure by owning long dated options or leaps on our favorite 4 of the hateful 8. So we're long Microsoft leaps from the green box. We're long NVIDIA leaps from the green box, which is basically off the 50-day moving average. We're long the Meta leaps even earlier. I've been sharing with you, I think there's a incredible importance of what's going on in VR and MetaQuest 3. And we're going to get into that in a minute. I'm going to highlight a stock for you. There's a stock of the day I'm going to share with you. We were buying it yesterday, and I think I'm not exactly sure the street realizes how important this stock is to the development of what's going on at MetaQuest, at Meta. And then the fourth horseman that we added recently of the Hateful Eight are leaps on Netflix. Okay, so where do we go from here? We're going to watch how the market unfolds. We read and react. If the market fails here, right now the market's gapping up. This will be classic gap and go day. Market gaps up, takes off, big end to the week. Week 6 is the breakout of the 4 to 7 week tight pattern. The leaderships go, and the next couple of weeks, the rest of the market follows. If that happens, we'll be max invested. Right now, we're max leadership, and we have a cash allocation. I'm somewhere around 20% cash. So where do I put that last bit of cash? It's really earmarked for my favorite individual stocks / innovative growth and small cap. I'm not putting that money to work until I see the ARMR algos for small caps and ARC and IBD 50 start to go like this. When we get risk on entry points there that confirm the leadership move, then I'll put more money to work. Okay, so I'm going to share with you a couple ideas right now that would be top stocks to watch in the eventuality that small caps join the leadership. Okay, And they don't have to. Last year in Q1, if you remember, the Hateful Eight led the whole market and the rest of the market never followed. Then Q2 and Q3 were difficult, and then Q4, the whole market rallied. All right. So who knows? Maybe we get that again. Maybe we don't get a follow through with the small caps. But if we do, these are the stocks that I would put on a watch list. Top stocks to watch: IoT, Palantir, IoT, Palantir, Datadog. Oof, Datadog's running away. ESTC, Elastic Corp. And then, of course, it starts with small caps. And so what I might do there, what I will do there, go with UWM, which is twice the performance of small caps, or TNA, which is triple the performance of small caps. I may do that. Just like I do the triple on the bigs, I'll do triple on the small. And we're going to talk about that next week. I'm going to have a whole discussion with you between double or triple an index versus buying an individual stock. I would suggest to you it's the same amount of risk, but different type of risk. So you have to figure out what type of risk you're willing to take. Okay. Well, we'll talk about that another day. So I'd look there. I'm going to watch ARC just in case I want to get long there. Okay. IBD 50 is starting to look interesting. All right. So let's round out this discussion with the number one stock to buy on the desk today. And we bought it yesterday. I love it. Erez, I love that that GIF you put on, on the X tweet that I put out about this. And it was the three amigos, right? And like Pure Storage is the Martin Short of NVIDIA and Meta. So there's a story came out today that Meta is buying an insane amount of NVIDIA chips. Of course, NVIDIA likes that story. It's up a little bit. Meta's up on that. I don't think it's up on that. I think the market's going up, and this story hit the tape today. And they're building out their data center. And they're building out VR aggressively. And I think people forget that Pure Storage has a significant relationship with Meta. Now, in the past, some people have pointed to that as a problem because too much of the Pure Storage revenue came from Meta. And Meta does these huge deals, and then they're done for a while, and then they come back with another huge deal. And when they're done for a while and people are waiting for them to come back for another huge deal, the bears like to pretend there's something wrong with Pure Storage. There's nothing wrong with Pure Storage, in my opinion. You need to be the smart money here. I'm sharing with you what I'm doing. Go do your own research, okay? I shared a chart with you guys today. William O'Neill, there it is. Okay, this is the breakout that's going on. This is the breakout going on in Pure Storage. It's just now coming into the $40 zone. It's below 40. Bought it yesterday. Okay, look at the weekly chart of Pure Storage. And what I submit to you, this is the daily chart. And what I submit to you is that the success of Meta, which drives the demand for storage, will continue to drive the demand for this very unique storage company that I would say has no competition. So this is a niche player in storage that nobody could compete against. This is my opinion. Go do your own research. Go listen to the conference call. Go hear what they're doing. They've built out their customer base. They're not wholly devoted to Meta anymore, but incremental Meta business is going to just drive this stock higher. So I love Pure Storage along with the Meta Growth. And that's the stock we were adding yesterday to the portfolio. So I wish you all a wonderful trading session. Armor Insiders at 9:30. We'll get the live stream going and we'll start trading together. Had a great day trading the S&P yesterday. Let's see if we do it again today. I'll leave you with this thought. Everything looks great. Market's gapping up. Let's see if we get a follow through. A strong weekly close will break out the leaders. But we also have our stops in place. We have to read and react. Get away from your ego. If the market reverses lower, we have to address that, manage our risk, reconcile what's going on, start over. It's okay. That's investing. Okay? So know what your goalposts are and manage your strategy through them. All right, guys? Have a great trading session. I'll see you on the other side.